Good morning. This is Joe Wolk, Executive Vice President and Chief Financial Officer of Johnson & Johnson. Thank you for joining us today to discuss our company's first quarter 2022 financial results and full year 2022 outlook. While many things have changed in the world since our last call, much has stayed the same for Johnson & Johnson. We continue to deliver reliable growth and generate meaningful free cash flow, enabling us to invest and advance our pipeline, increase our dividend for the 60th consecutive year, and continue to make a positive impact across the landscape of healthcare. It is, however, important to take a few moments to recognize the current events that are impacting the world we're living in. Today, while we're all still managing through the global pandemic, as evidenced by the current surge of cases in China, we also acknowledge the increasing hardship brought on by the war in Ukraine. We remain focused on the safety of our employees and their families. Guided by our credo and grounded in our purpose, our hearts are with all those affected by these crises and hope for a rapid resolution to both. Now, I'd like to turn the program over to Jessica Moore, Vice President, Investor Relations, to take you through our Q1 results.
Thank you, Joe. A few logistics before we get into the details. This review is being made available via webcast, accessible through the Investor Relations section of the Johnson & Johnson website at investor.jnj.com, where you can also find additional materials, including today's presentation and associated schedules. Please note that today's presentation includes forward-looking statements regarding, among other things, our future operating and financial performance and the anticipated separation of the company's consumer health business. We encourage you to review the cautionary statement included in today's presentation, which identifies certain risks and factors that may cause the company's actual results to differ materially from those projected. In particular, there is significant uncertainty about the duration and contemplated impact of the COVID-19 pandemic and other marketplace dynamics. This means that results could change at any time, and the contemplated impact of COVID-19 on the company's business results and outlook is a best estimate based on the information available as of today's date. A further description of these risks, uncertainties, and other factors can be found in our SEC filings, including our 2021 Form 10-K, along with reconciliations of the non-GAAP financial measures utilized for today's discussion to the most comparable GAAP measures. These materials are also available at investor.jnj.com. Several of the products and compounds discussed today are being developed in collaboration with strategic partners or licensed from other companies. This slide acknowledges those relationships. Moving to today's agenda, I will review the first quarter sales and P&L results for the corporation and the three segments. Following, Joe will provide additional business and financial commentary before sharing an overview of our cash position, our capital allocation priorities, and updated guidance for 2022. The remaining time will be available for your questions. During the Q&A portion of the call, Joe will be joined by Ashley McEvoy, Executive Vice President and Worldwide Chair, MedTech, Thibaut Mongon, Executive Vice President and Worldwide Chair, Consumer Health, and Jennifer Taubert, Executive Vice President and Worldwide Chair, Pharmaceutical. We have heard your feedback and are implementing a few enhancements this quarter. First, we are now providing select earlier phase clinical trial information on our pharmaceutical pipeline to streamline your data collection efforts from clinicaltrials.gov. Second, rather than sharing detailed business performance commentary on each part of the business, I will summarize the significant business drivers, leaving more time for Q&A. You can find additional detailed segment commentary in our earnings presentation. We anticipate the webcast will last up to 60 minutes. Now let's move to the first quarter results. Worldwide sales were $23.4 billion for the first quarter of 2022, an increase of 5% versus the first quarter of 2021. Operational sales growth, which excludes the effect of translational currency, increased 7.7% as currency had a negative impact of 2.7 points. In the U.S., sales increased 2.7%. In regions outside the U.S., our reported growth was 7.2%. Operational sales growth outside the U.S. was 12.6%, with currency negatively impacting our reported OUS results by 5.4 points. Excluding the net impact of acquisition and divestitures, adjusted operational sales growth was 7.9% worldwide, 2.8% in the U.S., and 12.9% outside the U.S. Turning now to earnings. For the quarter, net earnings were $5.1 billion, and diluted earnings per share was $1.93, versus diluted earnings per share of $2.32 a year ago. Excluding after-tax intangible asset amortization expense and special items for both periods, adjusted net earnings for the quarter were $7.1 billion, and adjusted diluted earnings per share was $2.67, representing increases of 3% and 3.1% respectively, compared to the first quarter of 2021. On an operational basis, adjusted diluted earnings per share increased 6.2%. I will now comment on business segment sales performance highlights. Unless otherwise stated, percentages quoted represent the operational sales change in comparison to the first quarter of 2021 and therefore exclude the impact of currency translation. Beginning in 2022, certain over-the-counter products previously reported under the pharmaceutical segment have been reclassed to consumer health. These products represent roughly $100 million of sales per quarter. Please refer to the supplemental sales schedules for prior year restatements. Also, as stated in our 2021 10-K, effective January, our medical devices segment is now referred to as MedTech. Beginning with consumer health. Worldwide consumer health sales of $3.6 billion increased 0.8%, with a decline of 3.4% in the U.S. and growth of 4.1% outside the U.S. Excluding the impact of acquisitions and divestitures, worldwide growth was 1.6%. Consumer health was negatively impacted by industry-wide external supply constraints, primarily due to ingredients and packaging availability, as well as labor shortages largely reflected in our skin health and beauty business, worth approximately 280 basis points worldwide and 500 basis points in the U.S. Adjusting for these constraints, consumer health delivered solid results, primarily due to above-market growth in OTC, driven by increased Tylenol, Motrin, and upper respiratory product sales. Moving on to our pharmaceutical segment. Worldwide pharmaceutical sales of $12.9 billion increased 9.3%, with growth of 2.9% in the U.S. and 16.7% outside of the U.S. Base pharmaceutical growth was driven by our broad portfolio of products paired with strong commercial execution, enabling us to deliver above-market adjusted operational sales growth, including 6 assets with double-digit growth in the quarter. Base business growth was due to strength from Darzalex, Tremfya, Stelara, Erleada, and our paliperidone long-acting portfolio. Growth was partially offset by LOE pressures from both Remicade and Zytiga, along with decrease in Imbruvica and Xarelto sales. Darzalex continues to drive very strong operational growth, with sales increases of 40.3%, driven by subcutaneous formulation penetration and meaningful share gains across all lines of therapy and in all regions. Imbruvica sales declined 3.9% worldwide due to increased competition from novel oral agents, particularly in the U.S. Imbruvica maintains its market leadership position worldwide and continues to drive growth outside of the U.S. despite ongoing competitive pressures. Xarelto sales declined 13.8% in the U.S., driven largely by a net unfavorable prior period price adjustment and increased costs for patient access, partially offset by continued demand and market growth. The COVID-19 vaccine also contributed approximately $500 million to sales in the quarter. Given these results, we remain confident in our ability to deliver our 11th consecutive year of above-market adjusted operational sales growth in 2022. I'll now turn your attention to the MedTech segment. Worldwide MedTech sales of $7 billion increased 8.5%, with growth of 5.6% in the U.S. and growth of 11.1% outside the U.S. Excluding the impact of acquisitions and divestitures, worldwide growth was 8.6%. We see strong performance in Q1 driven by market recovery, focused commercial strategies, and differentiated new products driving enhanced or sustained market share across most of the 11 priority platforms. We continue to monitor potential impacts on elective procedures driven by COVID-19 resurgences across various markets. Before highlighting the financial performance for the segment, I'd like to share a few notable first quarter MedTech events that demonstrate our stated aspirations of entering higher growth market segments and continuing to build upon digital technologies across the portfolio. 2 acquisitions were closed in the quarter: Crossroads Extremities, with a differentiated portfolio of bunion and hammer toe solutions in the fast-growing elective foot and ankle market, and Cuptimize, which will be a new addition to the VELYS digital surgery platform of connected technologies. The Cuptimize solution is designed to give surgeons an easy-to-use tool to better understand and address the impact of abnormal motion between the spine and pelvis in some patients who require total hip arthroplasty and may help reduce the risk of dislocation related to pelvic tilt. I am also pleased to share that Fast Company selected Johnson & Johnson MedTech as one of its top 10 world's most innovative health companies of 2022, recognizing MedTech's success and commitment to delivering breakthrough scientific innovation and reimagining health in an increasingly digital world. The Interventional Solutions franchise delivered another quarter of worldwide double-digit growth at 17.4%, with double-digit growth in both the U.S. and OUS regions, driven primarily by success of new products in electrophysiology, commercial execution, and continued market recovery. Worldwide surgery grew 5%, driven by strong performance in wound closure and biosurgery, where we continue to gain market share. Monarch-enabled procedures now exceed 14,000 since launch, providing continued evidence of the adoption of Monarch technology in patient treatment regimens. The worldwide orthopedics franchise grew 5.6%, reflecting COVID-19 recovery, continued penetration in the U.S. ambulatory surgery center channel, or ASCs, and penetration of new product launches such as enhancements to VELYS hip navigation, VELYS robotic-assisted solution, and ATTUNE cementless knee system. Partially offsetting this growth was softness in spine procedures in the U.S. The worldwide vision franchise continued its double-digit growth, growing 13.9% this quarter. Contact lenses global growth of 10.6% reflects continued positive momentum for our market-leading AccuView portfolio, success of commercial initiatives, and recently launched products such as AccuView Oasis Multifocal and AccuView Define Fresh. Surgical vision delivered global growth of 23.8%, with both the U.S. and OUS posting growth above 20%, fueled by market recovery and share momentum due to the success of recently launched products, including TECNIS Eyehance and TECNIS Synergy. As a reminder, additional sales commentary for all of our segments can be found on the slides. Now turning to our consolidated statement of earnings for the first quarter of 2022. I'd like to highlight a few noteworthy items that have changed compared to the same quarter of last year. Cost of products sold deleveraged by 70 basis points, driven by unfavorable mix in the MedTech business and commodity inflation in the consumer health business. Sales, marketing, and administrative deleveraged by 110 basis points, driven by higher brand marketing expenses in consumer health and timing of brand marketing expenses in the pharmaceutical segment. We continue to invest strategically in research and development at competitive levels, investing 14.8% of sales this quarter. The $3.5 billion investment was an 8.9% increase versus the prior year, primarily due to portfolio progression in pharmaceutical and MedTech. In-process research and development reflects an impairment expense of $610 million for certain indications associated with bermekimab, the investigational compound acquired from X-Biotech Inc., as disclosed in our previous SEC filings. This impairment was driven by the termination of development of bermekimab for atopic dermatitis based on efficacy data. The other income and expense line was net income of $102 million in the first quarter of 2022, compared to net income of $882 million in the first quarter of 2021. This decrease was the result of lapping prior year gains on the divestiture of Doxil, Calyx, and Evra in 2021, higher unrealized losses on securities, and consumer health separation costs. This was partially offset by favorable returns associated with our employee benefit plans. Regarding taxes in the quarter, our effective tax rate was 12.2% versus 16.6% in the same period last year. The decreased tax rate was primarily driven by lower U.S. income due to higher unrealized losses on securities and the impairment of bermekimab IP R&D compared to prior year divestiture gains. Excluding special items, the effective tax rate was 13.3% versus 16.5% in the same period last year. I encourage you to review our upcoming first quarter 10-Q filing for additional details on specific tax matters. Lastly, I'll direct your attention to the box section of the slide where we have also provided our income before tax, net earnings, and earnings per share adjusted to exclude the impact of intangible amortization expense and special items. Now let's look at adjusted income before tax by segment. In the first quarter of 2022, our adjusted income before tax for the enterprise as a percentage of sales decreased from 37.1% to 35.1% due to product mix, commodity inflation, increased brand marketing expense, portfolio progression in R&D, and comparisons to gains from prior year divestitures. Pharmaceutical margin declined from 45.5% to 44.1%, primarily driven by timing of brand marketing expenses and general portfolio progression in R&D. MedTech margins declined from 30.6% to 27%, driven by unfavorable product mix. Finally, consumer health margins declined from 26.8% to 22.1% due to commodity inflation and higher brand marketing expenses. This concludes the sales and earnings portion of the Johnson & Johnson first quarter results. I am now pleased to turn the call back over to Joe Wolk.
As Jess just mentioned, Johnson & Johnson posted solid performance for the quarter, continuing to invest in the business for the long-term success while overcoming multiple macroeconomic headwinds, including inflationary pressures and higher input costs. These external challenges include limited availability and rising prices of certain commodities, as well as increased costs for labor, energy, and transportation. These impacts are pervasive across the enterprise, but most notable in consumer health. We expect these pressures will continue to some degree throughout the remainder of 2022. However, mitigation efforts are underway, including cost improvement initiatives, strategic price increases, and contract negotiations with external supply partners. We are committed to sustaining supply of the products, medicines, and treatments that consumers and patients want and need. Turning to our segments and notable events in the quarter. MedTech led our enterprise performance with nearly 9% adjusted operational sales growth. We continue to drive this business forward and are increasing the value of our pipeline through innovation, internally and externally. We were pleased to see a steady uptick in surgical procedures this quarter with the easing of COVID restrictions in many parts of the world, but we recognize that the situation is fluid, which requires monitoring. Building on more than 20 major new product launches in 2021, MedTech announced the addition of 2 new innovations to our Attune knee portfolio. The Attune cementless fixed-bearing knee with Affixium 3DP technology and the Attune medial stabilized knee system. In our pharmaceutical business, we continue to deliver above-market growth driven by volume as evidenced by our recently published 2021 Janssen U.S. Transparency Report, which reflects our fifth consecutive year of price decreases across the portfolio, despite inflationary pressures. We also continue to advance our pharmaceutical pipeline. This quarter, we received FDA approval for CARVYKTI, a CAR T therapy for the treatment of multiple myeloma, developed together with our partner, Legend Biotech. We are partnering with clinics, utilizing a phased approach to begin patient dosing, and the feedback to date has been positive. We also filed teclistamab, our BCMA CD3 bispecific antibody seeking EMA approval, and we also received priority review from the FDA, potentially expanding our multiple myeloma portfolio further. In our consumer health business, we remain focused on delivering on our 2022 performance objectives, continuing to achieve above-market growth in our over-the-counter medicines business while navigating industry-wide supply constraints that have primarily impacted our skin health beauty business. We continue to be excited about the activity related to the announcement we made in November on the creation of two new industry-leading companies, the new Johnson & Johnson and the new Consumer Health Company. For the new Johnson & Johnson, the portfolio will remain well diversified, with 25 brands delivering over $1 billion in sales annually, holding market-leading positions across key therapeutic areas and franchises. The financial hallmarks of Johnson & Johnson will remain the same, including a well-defined capital allocation strategy, a disciplined approach to inorganic growth, and a strong balance sheet, while also creating opportunities to sharpen focus on execution and clinically differentiated innovation. The new Consumer Health Company will also have a strong financial profile and be better positioned to drive incremental growth, realizing increased potential in new markets through a more agile operating model. The company will continue to deliver science-backed innovation and enhance digital consumer-centric solutions. The Consumer Health separation team is making substantial progress related to our efforts in establishing the new independent company. As previously mentioned, we cannot disclose new financial information specific to Consumer Health in order to preserve optionality on the various separation pathways. Our timelines remain unchanged. We anticipate announcing key executive leadership appointments for the new Consumer Health Company in the coming months, with plans to provide the new company name and headquarters location around the middle of this year. In the second half of 2022, we plan to provide the updated path forward and applicable financial information such as refined stand-up cost estimates and potential short-term dyssynergies. Finally, consistent with previous communications, we expect to execute the separation in 2023. You have our ongoing commitment adhering to the regulatory framework to provide transparent updates for material decisions on a timely basis. Turning now to cash and capital allocation. We generated free cash flow for the quarter of nearly $3.4 billion. At the end of the first quarter, we had approximately $30 billion of cash and marketable securities and approximately $33 billion of debt for a net debt position of approximately $3 billion. Our capital allocation priorities remain unchanged. Internal innovation remains critical to our future growth and a top priority. In the first quarter, we increased R&D investment by approximately 9% compared to the first quarter of 2021. We also continue to evaluate opportunities to complement the current portfolio with acquisitions that build upon our capabilities, address portfolio gaps, or play in higher growth markets while yielding solid financial returns. As I mentioned earlier, we were pleased to announce today that our board of directors approved an increase in our quarterly dividend for the 60th consecutive year from $1.06 per share to $1.13 per share, an increase of 6.6%. Moving to full year 2022 guidance and key considerations. I'll start with comments on our COVID-19 vaccine and foreign exchange impacts, essentially the only items with updates from our January guidance. As market demand for all COVID-19 vaccines is currently challenged by global supply surplus and vaccine hesitancy in developing markets, we have made the decision to suspend guidance for sales of our COVID-19 vaccine. This will enable investors to focus on the performance of our core businesses, which drive the current and future value for investors. We are maintaining the total adjusted operational earnings per share guidance we provided in January, absorbing, if need be, the modest income impact from the COVID-19 vaccine. Regarding foreign exchange, as you know, we don't offer guidance or predictions on currency movements. But to give you a sense of the impact currency may have on potential full-year reported results, utilizing the euro spot rate relative to the U.S. dollar as of last week at 1.08, there is an incremental unfavorable currency impact of $1.1 billion on reported sales and an unfavorable 25 cents for reported adjusted earnings per share versus the calculation related to January's guidance. The full-year unfavorable impact is now projected to be $2.5 billion on reported sales and 45 cents on reported adjusted earnings per share. All other line items for which we provide guidance remain the same as communicated in January. To reiterate, we are maintaining our adjusted operational earnings per share guidance. We don't provide quarterly guidance, but do understand that you find value in us providing some qualitative considerations as you update your models. In consumer health, we expect supply constraints to continue throughout the year, but not to the same extent in the second half. As a result, we anticipate that the back half performance will improve over the first half. For MedTech, while the first quarter demonstrated faster recovery than we anticipated, our full-year expectations remain fairly intact. We anticipate continued market recovery and uptake from recently launched products and are monitoring the ever-changing COVID dynamics, particularly the surging cases in China. Similar to consumer health, we expect the second half to be stronger than the first half. As a reminder, with respect to growth rates, the second quarter was the strongest quarter for MedTech in 2021. The expectations for the pharmaceutical-based business remain the same. We anticipate delivering another year of above-market adjusted operational sales growth with relatively consistent growth throughout the remainder of the year. In summary, Johnson & Johnson had a solid start to the year despite managing macroeconomic headwinds, and we remain confident in our business. I would like to recognize the continued efforts of our 144,000 global colleagues focused on delivering our innovative healthcare solutions to our Credo stakeholders. Their unwavering dedication and support continue to inspire, and on behalf of the executive team, I'd like to extend our gratitude. I am now pleased to welcome to the call Ashley McEvoy, Thibaut Mongon, and Jennifer Talbert, our worldwide chairs, to address your questions. Kevin, can you please provide instructions and open the line for Q&A?
Ladies and gentlemen, if you'd like to ask a question at this time, please press star, then 1 on your telephone keypad. If you'd like to withdraw your question, press star, then 2. Please limit your questions to one question only. Our first question today is coming from Larry Biegelsen from Wells Fargo. Your line is now live.
Good morning. Thanks for taking the question. So many different places to go, but Joe, I'll start with M&A. There are comments on the tape stating that you're eager to deploy cash to M&A, especially for devices. So maybe for you or Ashley, can you add more color to your thinking there and the types of opportunities to consider? You've talked about reaching the top of the peer set in devices. That would seem to require a relatively large deal or a series of small, to medium-sized deals to move the needle. Is that a fair way to think about it? Thanks for taking the question.
Yeah, so Larry, I'll start, and then I'll turn it over to Ashley for some thoughts specific on medical devices. But before I answer, Larry, I do want to compliment you and your team for the foreign exchange report that you guys issued back, I think it was on April 13th. It's a tough topic to really grasp, and you guys did a fantastic job in assessing what it meant for the medical device industry. It was really a fantastic report, so well done. With respect to cash, as you heard us in January, we are reaching our lowest levels of net debt, and we will remain very active. You could talk to Thibaut, Jennifer, and Ashley with respect to ideas that they are bringing forth. We continue to have the same principles that we've had historically. We want to make sure there's a strategic fit. And by that, I simply mean we've got capabilities, we've got scientific expertise. Perhaps it's just our scale that adds more value to that asset than where it currently resides. And then we want to make sure that we compensate shareholders for the risk that we're bearing on their behalf when we do so. I would not get overly locked into size. Johnson & Johnson, quite frankly, has been built through a number of smaller acquisitions, and really the outliers are these larger acquisitions. But we look at really the strategic merit and then the financial value creation, and don't get locked into saying something is too small or too big with respect to adding to our already dynamic internal portfolio and pipeline. Ashley, I don't know if you want to comment.
Yeah, no, Larry, maybe before I get to M&A, just kind of some macro thoughts on MedTech in the quarter. I'm pleased with the results of the quarter. We saw positive signs of the market recovery. Clearly, while COVID has not disappeared, health systems around the world are becoming increasingly more resistant with each passing wave. And as we know, the world is a lot more equipped to manage the pandemic, and quite frankly, so is Johnson & Johnson. So encouraged to see in quarter one that we continue to maintain our path to above-market performance. We referenced that this is kind of a growth at scale, if you will, 11 $1 billion platforms, really most of them growing or maintaining share. And we saw robust sales growth across all four of our franchises and all four of our regions. Some standouts, encouraging to see both vision surgery and vision care, both double-digit performance and growing market share, really fueled by innovation in AccuView and Technis. We are the world leader in electrophysiology, still a category that has significant under-penetration. We've had 11 consecutive years of double-digit performance and really significantly enhanced our share gain. We're the world leader in biosurgery. The business was up almost 10%. Really driven by a clinically differentiated portfolio. And then finally and enthusiastically, I say we had strong performance in joints, really by penetrating some new sites of care like ASCs, both with hips and knees. So when I look forward, I'm encouraged by the organic agenda that we see in innovation, like with the likes of the FDA approval on AccuView TheraVision, the first drug-eluting contact lens. As Joe mentioned earlier, around really shoring up high-growth segments in knees with the Tune Fixed Bearing, and then really with Cerenovus, the launch of EmboGuard, the balloon catheter. So continue to advance robotics and digital surgery. You'll hear us talk about Monarch, 14,000 cases with a big pipeline of new indications, and then Velys completing over 2,000 cases. So when I think about the future of M&A, Larry, we're going to continue to do tuck-ins and to really digitize the patient experience. You heard us talk about Cuptimize as an example around really adding a precise delivery to hip navigation to improve outcomes. You're going to see us continue to penetrate fast-growing segments like what we have in neurovascular as an example. 90% of our capital deployment has been to $1 billion or more, but we do intend to make sure that we are well-positioned to be in the highest growth end-state markets.
Thank you. Our next question today is coming from Chris Schott from J.P. Morgan. Your line is now live.
Great. Thanks so much. Maybe, Ashley, just following up on some of your MedTech comments, can you specifically comment on China in terms of the impact you're currently seeing to the business and your outlook for that market specifically, given some of the lockdowns that we're seeing there? And then my kind of core question was just on Imbruvica. It seems like prescriptions here are really starting to see some erosion, and I'm trying to understand the dynamics you're expecting going forward. So is this, especially maybe the U.S. market, are you expecting that this erosion continues, or do you see dynamics in place that we could start to see some of those prescription trends start to stabilize a bit? Thanks so much.
Yeah, sure, Chris. So first, we have I would say, very strong and healthy business in China. We are number one in MedTech in China. We have a very diversified portfolio from surgery to orthopedics to interventional as well as vision. We did experience an impact probably in the March timeframe due to the recent surge of the viruses happening and the lockdowns, particularly in Shanghai and now other regions. We do anticipate that to continue in April and through the month of May. But like we've seen, I think China might come down a bit faster, but it comes back faster too. We have very strong leadership there, and there are a lot of patients that need care. I'll turn it to Jennifer maybe to talk about your second question.
Great. Thanks a lot. Hi, Chris, and hello, everybody. A few comments on the pharmaceutical business, and then I'll get to the question on Imbruvica. First, for our farm business, I was really proud that we delivered $12.9 billion in worldwide sales, with definitely above-market adjusted operational growth of 9.3%. And this is our sixth quarter where we achieved worldwide sales exceeding $12 billion. And as I look across the globe, the growth was really broadly based across our portfolio portfolio in the regions with particularly strong growth in EMEA, Asia Pac, and Latin America. During the course of the quarter, we really continued to maximize the value of our key brands. So strong double-digit growth across 6 of them, including Darzalex, Erleada, Tremfya, Invega Sustenna, Spravato, and Edurant. And we also had a number of important milestones, the first being the FDA approval of Carvykti, which is our first cell therapy for patients with relapsed or refractory multiple myeloma. The teclistamab filing in the EU was mentioned. The FDA approved expanded label indications for Cabenuva to be administered every 2 months for the treatment of HIV in virologically suppressed adults and adolescents. And we presented great new data on Tremfya in our approved indications of psoriasis and psoriatic arthritis, as well as from our phase 2 studies where we're evaluating the product in Crohn's disease and also in UC. So if we take a look at Imbruvica more specifically, Imbruvica sales did decline for the quarter, 3.9%, and this really was a U.S. story. Outside the U.S., our sales actually grew 4.5%. In the U.S., performance was impacted by both competitive factors with a number of new competitors in the market, as well as market softness. We haven't seen that market fully rebound to the pre-COVID levels yet. As we take a look at Imbruvica, Imbruvica has really changed the standard of care for adults with CLL and other B-cell malignancies. And it is the only BTKI that's demonstrated overall survival and a high rate of progression-free survival at 5 years with up to 8 years of safety follow-up. So we remain really confident in the efficacy and safety profile of the product. It's the market share leader and continues to be the most comprehensively studied and prescribed BTKI with over 250,000 patients worldwide. So we continue to work to develop the asset. We do see further growth opportunities through the introduction of new indications and new combination therapies. As we take a look at Imbruvica plus venetoclax that we're working to develop, and we filed in the EU. We're also taking a look at first MCL and really trying to bring that forward. So I think you can anticipate there will continue to be strong competition in that market. We continue to believe in and invest in Imbruvica.
Thank you. Our next question is coming from Joanne Wuensch from Citi. Your line is now live.
Good morning, and thank you for taking the question. I'd like to spend a little bit of time talking about the middle of the income statement. With all of the multiple headwinds on those factors, how do you think about managing it? What are the levers to pull? And how do you think about raising prices in this environment for each of your key divisions?
Yeah, good morning, Joanne. Thanks for the question. With respect to operating margins overall, which is really, I think, at the heart of your question, in the first quarter, I should say, we do tend to adopt a little bit more of an aggressive approach to advertising and promotion in hopes of getting the full year benefit of that promotion to the top line lift throughout the year. And I would say on R&D, it's also a little bit front-end loaded this year simply from the standpoint of the progression of our pharmaceutical pipeline as well as digital robotic surgery. So in pharmaceuticals, think about nipocalimab, our RSV vaccine. Those had very nice progression. Teclistamab may be moving a little bit faster than we anticipated, as well as being able to launch Carvykti. There was a healthy amount of inflation built into our P&L in the January guidance. What I think our teams have seen in let's say the first 4 months of this year is an uptick in that inflationary impact of about 10 or 15%. So still very manageable. Again, as you heard in some of the prepared remarks, we anticipate that inflationary pressure as well as commodity scarcity will subside a little bit in the second quarter and then hopefully more pronounced in the second half of this year. If it doesn't, it's certainly something that will keep our attention, and we have the resources to adjust accordingly to make sure that we not only meet the needs of long-term value creation, but also meet short-term performance expectations. So we all think it's very manageable at this point in time, but it's something that we're not taking for granted. We're being very active with cost initiative programs as we look to separate the two companies we are looking at ways to streamline technology, processes, things that will lead to leverage on the P&L.
Thank you. Our next question today is coming from Chris Shibutani from Goldman Sachs. Your line is now live.
Thank you. Good morning. Appreciate the opportunity. Perhaps directed at the pharmaceutical segment for Jennifer. Two products I'd like to focus on, one being Stelara and the other on Xarelto. With Stelara, could you perhaps elaborate a little bit more in terms of some of the underlying dynamics across the various indications, i.e. the derm versus perhaps the IBD, in terms of what the growth trends and outlook you are seeing and you expect there? And then for Xarelto, part of your commentary in the prepared segment discussed and mentioned about patient access. Could you just elaborate a little bit further on how that was an impact on the commercial dynamics? Thank you.
Sure. Hi. Thanks for the question. So let me start off with Stelara. So Stelara sales were $2.29 billion in the first quarter, and that was 9% growth. And we continue to see a lot of strength in Stelara. Ex-U.S., the product had nearly 18% growth. In the U.S., what we saw was growth around 3.6%. And what this really was due to, we saw an impact in the U.S. Due to the Omicron variant and the impact that it actually had on staffing resources that particularly impacted a number of areas where you had, more resource-intensive delivery of care, and GI offices was definitely one. As we take a look at Crohn's disease and ulcerative colitis, our share positions remain strong and with very strong positive momentum. We actually gained over 5 share points in CD and 6 share points in ulcerative colitis, so really strong growth and momentum. And in psoriasis, as anticipated, with Tremfya and the very strong growth there in psoriasis and psoriatic arthritis, we expected the Stelara sales there to start tailing off, and that's in line with our expectations. So we continue to have a very strong, a very positive outlook for Stelara going through the rest of the year in CD and in Crohn's and ulcerative colitis, where we've really been realizing the growth. And likewise, when you take a look at Tremfya, we saw 44.5% growth in psoriasis and psoriatic arthritis in the quarter. So together, really, really nice performance there. Question on Xarelto. So Xarelto in the U.S., we did see sales decline. That was largely driven by a net unfavorable prior period adjustment, and most of this had actually been a positive adjustment that took place in 2021. So when you do the comparables, it was negative, and so that was really due to the vast majority of that. With Xarelto, we continue to see really nice share gains and growth at a prescription level across the indications, whether we're talking about CAD and PAD, really the newest indication set, but also across AFib and VTE. And so it really was around the net unfavorable PPA and a little bit of channel mix as well, with some of the mix shifting into 340B and Medicaid and some of the lower price channels.
Thank you. Our next question today is coming from Louise Chen from Cantor Fitzgerald. Your line is now live.
Hi, thanks for taking my question. So I wanted to ask you about Carvykti and what gives you confidence in your ability to meet some of the manufacturing complexity associated with Carvykti, and how much capacity do you think you'll be able to bring online this year, both in the U.S. and potentially globally as well? Thank you.
Thanks for the question. So we're real proud about our approval and our launch to date on Carvykti. What I can say is that it is going well and it is on track with our expectations. We're real pleased. As you know, this is a customized therapy where the supply chain is literally built around each patient. We've got about a 4 to 5 week period that goes from the collection of the cells, the processing and manufacturing, and the return shipment of the final product, and then ultimately the infusion back into the patient at the treatment center. As we've mentioned before, we really are taking a thoughtful and a phased approach to scaling this launch to ensure a predictable and a reliable experience for the patients and for the treatment centers. We really tried to learn from the other launches in the market in this area, and so far we're off to a really good start there and have been very pleased with the feedback that we're getting back from our customers. So we have activated our initial round of treatment centers, and we did this based on folks who were very well experienced from our clinical trials and also very broadly dispersed throughout the U.S. To help ensure patient access. We're working through all of the orders and the slots that we have, and actually have product now that's been shipped back, has been manufactured and shipped back to the patients for infusion into the patients. So we're going to continue in a planned and thoughtful, responsible approach to this scaling, both in the United States as well as we scale outside the U.S. And throughout the world as well. Now, we discussed before around lentivirus, because there is an industry-wide shortage of lentivirus. That is something that we are also working and investing in to scale all of our internal capabilities to be able to meet the demand both now in our initial launches in the relapsed refractory setting, as well as our ultimate goal to be able to move into first-line setting here. And so we would have internal control on that as well. So hope this answers your question.
Thank you. Our next question is coming from Josh Jennings from Cowen. Your line is now live.
Hi, good morning. Thanks a lot for taking the question. Joe, since Joaquin made some public commentary on his commitment to support Ashley and her team to drive revenue growth acceleration in the medical devices unit, focus has been on M&A opportunities. But how should we be thinking about the level of internal investment to fuel growth of the devices franchise? You don't break out the percentage of R&D spend allocated to devices, but one data point we do have is from the 19 Pharma Day when you related $8.4 billion of the $11 billion in R&D expense from 18 went to pharma initiatives, and that's north of 75%. But has that stepped up, just the level of investment in the devices business over the last couple of years, and will that step up even further? And just to be clear, Ashley did not plant this question with our team.
I'm going to check the transcript on that, Josh, just to be sure. But listen, I think what you would hear if Joaquin was sitting here is that he supports all the businesses with respect to innovation. We realize that our calling card is innovation, and we're going to have growth across all of our franchises when we have products that matter, that are differentiated, that are beyond the current standard of care, and meeting consumer needs as well. I actually want to credit Ashley and her team for the way they've managed their P&L. They've been conscious about moving more of their investment into R&D. You saw a record number of 20-plus new product launches last year that are considered meaningful. We're going to be very close to probably a very similar number this year. And so that portfolio has taken very much the same approach that I would say pharmaceuticals did almost a decade ago, when the focus is very well understood and where we want to play because we've got a strategic or competitive advantage will be capitalized upon. I don't know, Ashley, if you want to add anything more, but I think that certainly there is continued support, but a lot of the credit goes to Ashley and her team in terms of managing their levels of investment throughout the P&L.
Thanks, Joe. Josh, I would say that we are investing at a competitive level, and I'm really pleased with the state of execution. We have in our pipeline right now 27 $100 million plus EMPV projects. That number 3 years ago was 6. So they continue to, focus the pipeline on medium to higher growth segments and really execute. And we're off to a good start in 2022.
I would maybe underscore, too, is that gives us the confidence to go out and add in inorganic opportunities when the opportunity presents itself, using the criteria of strategic fit as well as financial value creation. So, a stronger internal pipeline begets hopefully success out in the acquisition markets.
Just to reference our 10K, we do provide the breakout of R&D by segment on an annual basis for reference.
Thank you. Our next question today is coming from Terrence Flynn from Morgan Stanley. Your line is now live.
Great. Thanks so much for taking the questions. Jennifer, I was just wondering if you could elaborate a little bit more on the COVID recovery in the pharma segment. I know you touched on staffing issues on the gastro.
Yeah, so I understand Terry's comment really was around the U.S. and what we're seeing in terms of COVID. So, as we exited last year, really in the December timeframe, and entered this year into really January and February, we did see the Omicron variant impact the U.S. business. And what we saw there really was what I mentioned before. We did see staffing shortages because so many people got sick, people weren't able to go into work. And so in the higher, more intensive resource settings and some of the markets, we did see slowdown in terms of delayed visits and new patient starts. What we are seeing now is we're looking towards the end of March and in early April, we're seeing nice recovery there. And so this really, hopefully was something really just, at the end of last year and the beginning of this year. And it does look to be more specific to the U.S. Than to any of the other markets.
Thanks, Jennifer. Hey, Thibault, maybe give some insight, too, on the consumer segment and how COVID's impacting. Obviously, it was much more tumultuous, I'd say, in 2020 and 2021, but what are you seeing to the early start of this year?
Look, clearly we continue to see the impact of COVID on the life of our consumers, and that has an impact, a differentiated impact by category. We are looking at China very specifically right now to see how the situation evolves there. What I would say that COVID has really shifted consumer behavior to digital space and digital solutions, and so and we see it in the continued growth of our e-commerce channel, representing more and more of our business. So that's what makes our world more resilient. This ability to count on multiple channels is something that is serving us well in a COVID environment. Having said that, we need to continue to monitor how the situation evolves around the world. Thanks.
Thank you. Our next question today is coming from Matt Miksic from Credit Suisse. Your line is now live.
Thanks so much for taking the question. So maybe for Ashley, was hoping you could provide a little bit more color on med devices in Q1 and this trajectory exiting March. You had pretty impressive growth across the board, so congrats on that. But investors are often trying to just figure out the difference between inpatient segments like orthopedics or cardio or advanced surgery, and how those are recovering potentially at different rates in the U.S. and what you might be seeing there, as well as any color you could provide on how, say, Europe and Japan, overseas developed markets compare with the recovery trends we've seen in the U.S. Thanks.
No, thanks, Matt, for the question. It's April 2022. We're still talking about this. So just huge acknowledgement for our healthcare workers who are still battling through this. But I would tell you, EMEA really bounced back nicely in quarter one. It was pretty broad-based within EMEA. I would say Asia, with the exception of China recently, also bounced back. And then U.S. really gained momentum. I always look at two data points in the U.S. as an example. I look at how were diagnostic procedures performing in the U.S. and then how are surgical procedures performing. And probably at our trough when Omicron was hitting in the U.S. in January, we had about flat diagnostic procedures, and we were looking at surgical procedures down near double digit, down 10%. Encouragingly, as we exited March, we started to see diagnostic procedures tick up to high single digit and start to see a flattening of surgical procedures. I expect, in the month of April in the U.S. to see it go north of 2019 levels, really driven by cardiac ablation, bariatrics, and colorectal surgery.
Thank you. Our next question today is coming from Geoff Meacham from Bank of America. Your line is now live.
Hey, guys. Good morning. Thanks so much for the question. I just had a couple. Jennifer, in the myeloma market, we'll see Revlimid generics soon, and I realize that combinations with Darzalex are standard of care, but what are your expectations for broader market disruption going forward, either from a pricing or share perspective? And then a quick follow-up on the M&A front for Joe. When you think about the P&L or cash flow impact from the consumer separation, to what degree does this inform or impact plans for a larger scale BD or M&A, for either medtech or pharma? Thank you.
So thanks for the opportunity to talk about our multiple myeloma portfolio. And, in response to your question, so, as we take a look at the myeloma market, despite the advances to date in therapies, there is still so much unmet need there, given the underlying heterogeneity of the disease. And so it's really important that there are treatment choices, and what we're really trying to do is to have a strong portfolio of highly effective treatments and actually ultimately shoot for a cure. And so as we take a look at the market with Darzalex and Darzalex Faspro right now, we're really seeing this as a foundational therapy for multiple myeloma. And so irrespective of, others and LOE and those types of things, as you noted, it's a lot of combination therapy and things like that. That does not fundamentally change the opportunity for Darzalex and Faspro. What I'm also really excited about is then you add in Carvykti that was recently approved, as we mentioned, for triple refractory multiple myeloma. And we really think that this will ultimately become a preferred treatment for patients with relapsed refractory multiple myeloma. We also mentioned teclistamab and the filing of teclistamab, and this really is the first ever BCMA CD3 bispecific. And we think that this is, going to be a great off-the-shelf option, and for patients who really are triple class exposed and who are really not eligible for Carvykti or don't have access. And then in the future, we're not stopping there. We're also working on talquetamab, and this would be the first and potentially best-in-class GPRC5D bispecific that we think could be potentially sequenced and combined to help transform outcomes. And so as we take a look at our portfolio, we really think that these assets are additive and complementary versus something where they would be cannibalizing each other. And we really think that these are the important advances that are going to really help transform multiple myeloma in the future and going forward versus any of the older therapies.
And Jeff, with respect to cash flow and M&A, I think I'll answer that in two parts. I think short term, we certainly have the credit rating to warrant more firepower should we need it. As you have observed, our cash flow generation over the last couple of years has ticked up to new levels north of $20 billion or around $20 billion from when we were just maybe $17 billion a few years ago. As the consumer company separates, I think that's going to be actually liberating for both sides. We still have opportunities to improve our cash flow with inventory management and receivables. But as we move to a higher growth segment, we think we'll be able to generate a similar cash flow with a higher level of sales growth, managing the P&L appropriately. So I've got every confidence that we'll be able to do small, medium, and large-scale acquisitions should the right opportunity present itself. I also think it's liberating for the consumer health segment because they'll be able to focus their cash flow generation to value-creating opportunities through their particular lens, being fit for purpose in a digitized environment that Thibaut spoke to. So whether it's near-term or long-term, I think we're in a very good position to utilize today's cash and hopefully that which we generate tomorrow. Kevin, maybe we've got time for one more question.
Certainly. Our final question today is coming from Danielle Antalffy from SVB Leerink. Your line is now live.
Hey, good morning, everyone. Thanks so much for squeezing me in. This is a question for Ashley, and it's the commentary around the ASC penetration. And I'm just curious, Ashley, as that site of care becomes increasingly important, where you guys think you are relative to the market from a penetration perspective and where you think you can grow, how meaningful of a growth driver will your recent success in the ASC be over the next few years? Thanks so much.
Well, thank you, Danielle. Appreciate the question, and hope you are well. We in U.S., the ASCs, I think, it's still relatively low penetration. I would tell from a macro U.S., less than 20%, but I think it's the fastest growing, as we know. In a COVID environment, we've seen, the model evolve to create a safe, more patient-friendly experience that addresses the patient sentiment of not wanting to go into a hospital setting. Certain procedures have gone there early, sooner than later. I'd say hips are migrating there and knees, less spine per se, less complicated, obviously trauma cases still happening in the hospital setting. We've done a lot of work recently to modify our business model to make it a capital efficient flow, if you will, on inventory management, on the personalization of care using digital assets to kind of make your pre-op and your post-op experience less full of friction. And, we're taking a lot of that experience in the U.S. ASCs to really what we're doing in China in the Tier 2 and the Tier 3 cities as well as we deliver care. So I'm optimistic that this channel will continue to evolve. I do think that we've increased our competitiveness there, and we're making sure that we really have a sustainable business model going forward. Thank you.
Thank you, Danielle, and thanks to everyone for your questions and your continued interest in our company. We apologize to those who we couldn't get to because of time, but don't hesitate to reach out to the investor relations team as needed. I will now turn the call back to Joe for some brief closing remarks.
Great. Thanks, Jess. And as Jess alluded to, we certainly do appreciate your questions and the chance to interact with you. I'd like to remind everybody as we close that we do have the opportunity to engage with shareholders at next week's annual meeting on April 28th. Also, be on the lookout for an update on our commitments to ESG. On June 8th, we will be issuing our Health for Humanity report, which is an in-depth review on the progress we are making on our 2025 goals. Thank you for your time and your interest in Johnson & Johnson. Have a great day.
Thank you.
There we go. There is the earnings call for Johnson & Johnson, looking very, very good. As you can see, the markets have reacted very, very well to that. So we're very, very happy about that. Welcome all to the Day Trader. My name is Martyn Lucas. We cover the live earnings reports, and let's get now straight over to the regular day of business. But as you can see, the markets love that. That's a big part of my portfolio. It's nearly 4% of my portfolio is in that. So I'm very happy to hold that and see that doing very well today. So there we go. Let's clear the overlay ticker just for the minute. Let's clear that away. But we are looking very, very good. The overall market is slightly down, though, 1.5%. But that's why I hold Johnson & Johnson, a big part of it, and it's starting to recover right now. Let's see where we go this morning with Johnson & Johnson. All right, we have the Tesla earnings after hours tomorrow. That'll be very interesting as well. So we look forward to that. So we hope you'll all join us for that. Right, let's go through our stocks right now. Let's have a look. IPOF, we're making money with IPOF now, up 4.5%. Let's welcome our guests. We got K-Kist. Tesla is our after hours report tomorrow. So click subscribe and ring the bell and you'll be invited to attend that. That'll be in the after hours plus discussion. Okay. Give us a thumbs up. And if you ring the bell, you'll be notified about tomorrow's event for Tesla. All right, let's go through the stocks right now. IPOF, as you can see, my S&P 500 is also up, looking good on the back of Johnson & Johnson. Tesla is doing well, firing off again today, looking good. Rivian is down, an opportunity to buy a bit more if you like at 37. Down 5%. I don't really want much more. K-Kist said, just gave us a thumbs up. Tesla's just dropping off slightly, but we've got the earnings report tomorrow. There is some leaks about some delays, but that's already built into the price. I'm not concerned about it. We'll find out about it tomorrow night, of course, after the earnings report, after the main show tomorrow night. All right, let's go across. Rivian is down this morning. We're seeing another dip right now. I'm not going to buy any more. It could go lower. Virgin Galactic is down, but now recovering again. I like it. I like it. I'm holding it. I'm not going to just I'm not going to sell this out at all, even though I could take some profits. I'm up to, $1,000. I could clear a lot of margin away, but I'm not going to. I'm going to hold on to it. Amazon is down slightly, but I'm still up 7% on Amazon. Twitter is also down, but I'm out of that now. I sold my position. Nvidia is down 9% now, which is 1% today. One for the future. I could buy more at this price, but I'm not going to right now anyway. Meta is down very slightly today. Let's close our Johnson & Johnson. There it is. Gores Guggenheim today is down 0.5%. I took my profits at the top. Lucid is down 1.72. For the first time, look, we're under $20 now. A good opportunity to buy Lucid. I do have a lot though. I don't know if I want to get much more Lucid. I mean, there could be a bit of a pop there, I suppose, but I could do it for a quick trade, but I'd rather be a bit more cautious right now as the markets are falling. Robinhood, we are down today 0.36. Palatine is down today 1%. If you just tuned in, subscribe and ring the bell. Welcome, everybody. Give us a thumbs up. Let us know you're here. We'd love to hear from you. Give us a thumbs up and share this video. We are here for the rest of the opening part of the morning, and then we got the closing bell this afternoon. We've got competition videos coming out today. We've also got the earnings report tomorrow for Tesla. I completely forgot what I was saying then. Welcome everybody over on TikTok. We're here live on YouTube. If you want to join us on YouTube, this is where we are. Come and join us. PayPal is down. Let's have a look at our cryptocurrency. Ethereum up today. Bitcoin up today. It's pretty good. Still down 3% on it, but holding it. Every day that passes looks a little bit better. Ginkgo Bioworks, I made my profit. I'm out right now. IonQ, I'm in that one. 23% down on IonQ, quantum computers. And going back to IPOF a minute, this is the rumor with Tesla. The rumor with Starlink and SpaceX. I'm up 4%. I'm not going to sell it yet. I am making a profit on it. It's just a rumor right now, though. The overall portfolio is dropping. I'm at 1%. I'm at 5% on the month. Steadily going very well, actually, this one. So I'm going to hold this for now. We keep seeing these peaks and troughs. Going to leave it there for now. Looking at it doing quite nicely today. Coming back to the main portfolio. I am down 2% overall, though. And a lot of that now is Virgin Galactic. I was up high as 11.5, down to just at 8.51 right now, and we're losing a bit more. I could sell this out and take a lot of money out. I mean, there's 8.5 grand sitting there, but we're having a bit of a dive right now. Let's look at Mullen. Mullen we bought some more yesterday, but literally hardly anything at all, just for a bit of fun. I won't buy any more now. It's in free fall. Tilray Brands is down 2% today. That's quite a big position for me. Down 2%. I'm down 21% overall. I could halve that if I spent 1.5 grand, but I don't want to do that. I don't want to spend any more of my money right now unless that really goes down. But then you have to ask the question, why has it gone down? All right, the overall market is piling down 2.27. IPOF is just dropping back a little bit. We were up there for a while. We're up 4.5%. It's a reasonable return right now. Oh, we're having a little bit of a pump this morning in IPOF. Let's see where that's going to go. I'm up 4.5%. I could take that profit. It's only $47, but it's all about percentages. It's not about money. It's about percentages. 4.5%. This is one that could double, of course. We're looking at a 10x, a doubling our money. But in the current market, we're seeing so much fall. I could do with clearing some margin, would give me a little bit extra wiggle room. But we are seeing it start to come back now. Let's go to the live position. We are seeing a slight recovery. This is still early in the morning. We're only 10 minutes into our markets this morning. If you've just tuned in, by the way, let us know you're here. I bought SpyCall. Congratulations to you, Moose. Well done indeed. Look at it this morning. Let's go over to our Bitcoin. Our Bitcoin is doing all right. Holding up. That's good. Ethereum is holding up as well. Coca-Cola is up today, 0.16. Very nice. I think somebody asked me about that earlier. Let's try and correct. There we go. TikTok. There we go. Coca-Cola's doing all right. Let me bring you any breaking news as well. We've got some breaking news right now. Here we go.
The misleading is different to lying.
Yeah, that's the grey area I was referring to. And as you said, this interpretation of the ministerial code. And also, as you said, self-regulation. I was talking to the Labour MP, Chris Bryant, who's the...
Okay, nothing we need to listen into there, but I just noticed we had breaking news, so I brought it to you. I'm very happy with my Coca-Cola position, up 6%. Very, very nice indeed now. Very, very nice. 6% on that one now. And, of course, get great dividends. It's nearly 2% of my portfolio. Very, very nice. Having a good day today. Very happy with that. Gores Guggenheim, Google is down 3% overall now. Down slightly today. Oh, there it goes. It's now up again. Fantastic. That's much better. All right, there we go. Up 0.32. Down 2% at the moment. But I've not had Google very long. Let's look at our Nile. Oh, there we go. We're getting a recovery now. Let's look at Nile, one of our investments as well. BitNile. We've got some shares in this one. Let's have a little look at BitNile. Let's have a look at it. Right. We've got 1,000 shares in BitNile. It's down 11% today. And we was okay yesterday. But we've dropped 11% today. So, what do you think? An opportunity to buy? It's going back down here. We popped up again. Yes, I know, but I still want to learn. I hope you're well. Rob McLean is here. Let's have a look at this. We bought this at 81. It's 62 right now. We bought it up at here. I don't want to buy any more of this at the moment, even though I'm down and it could lower the average. I don't want to get any more into this. I don't want to spend any more money. Not at the moment. Not on high-risk stocks like that. We're nearly green again now. Not far off. Johnson & Johnson done very, very well for us today. Let's have a quick look and see where it is. J and JNJ. There we go. Let's have a quick look. Got a funny feeling it's doing very well. Yes, indeed. Look at that. Up nearly 4% today. It's currently nearly 4% of my portfolio, which is really good for such a strong company. Really well. That really was very positive today for that earnings report. And it pays a very good dividend as well. So a very important thing to note. It pays a very good dividend. So that's very nice to see today. You always own Johnson & Johnson. It's like owning Microsoft or Apple. It's one of those blue chip companies you always own just for the dividends alone. Stability in the market. It's part of the S&P, of course. We might turn green. We threatened to turn green for a few moments. But Johnson & Johnson absolutely loving this today. Up 4%. Very, very nice. They loved it. Now, this is the opposite. Buy the rumour, sell the news. This is buy the news. We are running now. So Johnson & Johnson is oversold. We had a lot of fear in the market. As you can see, sold down here. And now it's recovering. Last few months, it's done very... In fact, it's held up, look. Held up all the time. Look at that. Great stock to own. Great stock to own. Very happy with that. Very happy to be up nearly 10% now. Very happy with that. Don't need to buy any more. Just let that run. Earn the dividends. Looking very nice indeed. There we go. Nudge it, budget, move it is here this morning. Nudge it, budget, move it. We've adjusted the homepage for you. Alex, I hope you like it. We now have all the shows for you now in with the dates on. Look, they have the date in the title. They have the opening bell, closing bell. Look, all there for you. That was Alex's idea. And there we go. Thank you to Alex for bringing that to us. That was Alex's idea. I like it. It's gone down well. People like it. Still hard to find the live in YouTube. I have no idea why. You go to the homepage of my YouTube channel and the live video is right there on the top. I don't know how I can make it any easier unless I write the code or rewrite the code for YouTube. It's right there. It's the live video at the top of the video at the top of the channel. They're in date order like a TV guide. It's live right there, live now. I don't know how to make it any easier. In fact, there's nothing else I can do. Oh, your dividend is only $4.52 a share on JNJ. Oh, your dividend is only $4.52 a share on JNJ. Is it? I can't say without checking. I'll screen grab and show you what YouTube shows. Lucid went back below 1985, picked up a few shares. Yes, indeed. I was looking at it, but I don't know. I don't want to spend any more money. That's the thing right now. Margin call isn't that far away with markets like this. You know, we're down to 10 grand left, about 10%. No, 4.5 would be 10. About 20% drop. I don't like being 20%. 30, 40, 50, different ballgame. But 20% is getting tight in a market like this. So we don't want to over-invest. Remember, it's not about making money. It's about keeping your money. It's easy to make money on the stock market. The hard bit is to keep it. And we want to keep our money. Right, so we're up 4% now, or nearly 4% on Johnson & Johnson. Done very well today. The earnings report went down great. We got new comments coming in from Muzanella over there. Now, I've just opened the green room. If anybody wants to come in and have their say about anything at all, whether you want to talk about Johnson & Johnson or whether you want to talk about anything at all. Some of you are saying it's a boring stock, and I was nearly going to write in the chat, boring stocks make money. Boring stocks make money sometimes. So anyway, if you want to have your say about anything, if you want to wish anybody well, if you want to just say hello to anybody, then you can come into the show. You can come into the show right now. The broadcast voice channel is open. There's no green room anymore. You can come straight in. So it's very, very easy for you now. All right. Okay, much, much easier than it's ever been before. Just want to share with you how it looks now. Here is the in-broadcast channel. Right there, look, at the bottom of in the voice channels. You just come straight in. If you want to come in, if you want to say hello, if you want to promote your business, nudge it, budget, move it. If you want to come in today and talk about your services, or just say hello, or do a soundbite, you just come straight in. You'll be muted when you come in, and I'll unmute you to bring you into the broadcast. So very, very easy. We've made it easier for you than ever before. Hopefully you'll see that. Okay, and let's get straight into our day trader of the day coming up in a few minutes' time. And we'll look at that. If you've just tuned in, subscribe and ring the bell. Give us a thumbs up. Let us know you're here. And we are live again for the closing bell this afternoon. And we also have some videos coming out, competition videos coming out. We always have the cash giveaway on Fridays, but we have extra ones as well. And look out for all those videos. That will tell you all about it. Let's watch Johnson & Johnson still up 7% now. Wow. Absolutely awesome. XOS is doing well. Let's look at XOS. XOS. Let's open it up. Up 1.74. I'm still down 9 though on this one. Still down 9. Not made any money on it yet, but thanks for letting me know. When that pops up, I will take some profits on that. But at the moment, it's not there yet. But the portfolio could turn green at the moment. And a lot of that is thanks to JNJ. Very nice indeed. BitNile is trying to recover. IPOF, up nearly 4.5% now. Was 5.5% earlier. I want to keep that. We're about to turn green for the day. Very, very close. The S&P is doing very well. It loves J&J. There we go. We're turning green. 0.29 down. Very, very close now. 15% of my portfolio is the S&P. I like that, and it's growing all the time. I keep adding when it's down. Tesla has done well, holding up. We are about to turn green. Very close now. And a lot of that is now because of J&J. There we go. The earnings report. I know a lot of you found it quite boring, but there was a lot of good information there about the future of many, many areas of science, biopharmaceuticals, all kinds of really, really good stuff. All right, just down 0.11. This is looking very nice. Let's have a look at what our big gainers are. Bitcoin is having a big pump this morning. Did anyone get that? CMPI. Missed that one. I didn't see that one. Sorry. Ethereum has done well today. Coca-Cola, fantastic for Coke. That's a big day, 0.37. I'm up 6.5% now. Very nice. Google has pumped nearly percent. Oh, we are literally, we are firing off now. Look at that. It's very much a green day. Very much a green day right now. Wonder how high we can go. 46. Very, very nice. Did anyone... 340%. Wow. Up 0.5% now. J&J is still running. Up 8%. Sorry, up $8. 4.5%. That went down really well this morning. BitNile down 23%. Nothing there. IPOF is still coming up. Let's take a look at SPCE. SPCE... SPCE has gone up 4%. There you go. Don't sell your SPCE. It doesn't want to go below 9. I know it keeps dropping a bit and then it recovers. It keeps bouncing around. We've got that good news coming, look. It doesn't want to go down. People are trying to short it and send it down to $2 or $3. It's not going to happen. Every day we get closer to the good news. It's not going to happen. Look, it's been bouncing along here now for 3 months. Despite, look, everything. This is its bottom. This is nice. This is the good time. I like it. Like it a lot. Look at that. 4%. We are up now 0.5% on the portfolio. Hold your ground. Hold your ground. Sell it and buy the dip. No. I'm not selling it. Think of it. You know it's going to be $100 later on this year, right? I got it for $7.57. I've got it for virtually free. It's $7.57. I mean, yeah, I could sell it, but I was up 25% just a week ago, a couple of weeks ago. I'm not doing that. I don't care. It's worth too much, and that's the point. That's why stocks go down, because people sell them. I've got 1,001 shares in this, and I'm holding it. If you wanna buy my, this is how the market works, right? If you wanna buy my Virgin Galactic, you've got to give me $12, and even then I wouldn't sell it. So then it goes to 13, then I won't sell it. So that's what drives the markets up. Right, look at this. We are now up. Where's market profit when you need him? Up nearly 1%. Else he'd run off that 1985 Lucid. Yeah, there was a great opportunity this morning to buy Lucid, most certainly. I didn't buy it. I missed out. I don't want to spend any more money. I've got a lot of margin used. I want to make some profits. I want to get away from 33,000. And we're going up 46, 40, coming to 47. So doing good. Doing good today. All right, Johnson & Johnson just peaking now for the first time. It might finish at that now, because that's a very good day for Jen. George Zapata just subscribed. Welcome, George. Lovely stuff. Arrival in the green. Shall we have a look? Arrival. Let's have a look. Arrival. Let's take a look at it. Let's have a look at Arrival. Yes, that's better. 3.5% today. Tech stocks returning. Now 700 shares. Need it above 21. Very nice. Martyn is ignoring me. Am I? What's going on, Moose? What you saying? Matt, I posted my trade from this morning. You can share my trade from a few minutes ago. What do you mean, Moose? What are you saying? What am I missing? How am I missing anything? Martyn is ignoring me. I don't think so. What's going on? What have I missed? Moose and Ella's tips. I found this article for you. JNJ's suspends sales forecast. J&J suspends sales forecast for COVID-19 vaccine, cuts profit. Hang on. Oh, that was a long time ago. Hang on a minute. Let's have a look. Moose made $7,000 in one trade. No way. Wow, look at this. Everybody, I got it. Moose and Ella's trade. Look at this. Achieved my goal and more today. Look at that. $7,000. Look at that, everybody. He made $7,000 in one trade. This is Moose and Ella's post onto Discord this morning. Go and check it out. One scalp this morning. Request for Zachary in Discord chit chat. Let's go and have a look. What's in general chit chat for? There's nothing in there from Zach. If we can help Zach, great, Bill. I know this may sound awkward considering what to support charity work. I find it equally, but I'm in need of a laptop. My old laptop I was using. I'm kindly request if you have people who reaching out to donate to us 2 laptops, please do. This will really make our work simpler. I'm not sure what that means, Bill. Are you requesting that on behalf of Zach or what? Request for Zach in Discord. Why wouldn't Zach put that in there? I'll read that later. I didn't quite understand it. Right, back to the main portfolio. We're up now 1%, 1.35, 46.6. This is absolutely great. Doing really nice this morning. Arrival is up 4%. I'm still down on it though. Johnson & Johnson's now just slowing down. Bitnar's coming up. IPOF is just slightly up today. I'm at 4% on it, but I'm going to hold it. The Vanguard S&P, yes, he sent it to me. Oh, I see. Okay. Go and check out General Chit Chat, folks. Thank you ever so much, Bill. Go and check out Discord if you want to go to General Chit Chat. There's a request there from Zach if anyone's interested and can help there. All right. Tesla up 1.37 today. Rivian returned very nicely today. Got 21 shares of Rivian right now. Virgin Galactic up 3.5%. Amazon is up 1%. Deep in the money is here. Morning to you. Looking very nice this morning. Looking very nice this morning. Right, day trader of the day. Okay, we're not even going to ask Moose. He just made $7,000 on one trade. Our biggest trader today by a long way. So, up 1.3%. Going to give everybody... EV's doing well so far today. Yes, indeed. Looking very nice indeed. Let's give everybody the timer. And you have 1 minute to post your score. I thought you were a day trader. You said holding. I am a day trader, but I'm also a long-term investor. I'm here to make money however it presents itself. It doesn't mean I won't sell or make money or change my positions. I'm fluid all the time, looking at what's going on. Okay, so let's do our timer now. Here we go. Day trader of the day. Put your scores on the doors. Okay, here we go. And Fusion is up 1.5. He goes ahead of me. Deep in the money's up 0.7. I'm 1.3, but Fusion's ahead at 1.5. Matthew Stevenson, 6.2. Absolutely great. I'm at 1.46 now, if it helps. Anyway. Have we got any more scores? 6.2. 0.27. That's Matthew Stevenson still holds it at 6.2. Looking good. Here we go. 5, 4, 3, 2, 1. Go. Good steed. All right. Me now. Hang on a minute. We've got another comment just popped in there. That's from the other day. Let me delete that comment. So there we go. So we've got here Matthew Stevenson up 6.2. So let's give Matthew a big thank you very much indeed. How much is Moose up? Yeah, 1,000%. There we go. Thank you very much for your honest trade. Give him a thumbs up. And there we go. Big round of applause. Great stuff. Well done indeed. Very good. And I'm sure that Moose is up by a lot more, but he's kept that to himself today. There we go. And just come in at the end there, we had Bill was down 1.3. Sorry to hear that, Bill. Sorry to hear that. All right. Let's get straight back into the trades. We're up 1.1. Thanks, guys. Yeah. Congratulations, everybody. Everyone congratulate Matthew Stevenson. Did a great job there. Absolutely great. Nice one. All right. Okay, he has a large account. He does. Me and Moose often talk on the phone and discuss his strategies. Breaking news. I'm going to bring you some breaking news. This is a new feature, an old feature we've been asked to bring back. So here we go.
Such as migrants in the Channel, cost of living, and so on. So, on the significance of what Lindsay Hoyle has announced just half an hour ago, he began by saying he's had these letters from opposition leaders, including Sir Keir Starmer. He said, first of all, it's not for me to police the ministerial code. I've no jurisdiction over the code, even though a lot of people seem to think I have. He said, second, it's not for me to determine whether or not the Prime Minister has committed a contempt.
Okay, we'll come back to that. That's not that important to us right now. So there we go. Congratulations. Deep in the Money congratulates Matt, and so does Mike, and so do I, and so does everybody else. That's absolutely great. Okay. Great stuff. Well, we just need to go very, very quickly and take a very, very quick commercial break. We haven't run a commercial today. We started early because of the earnings report. See you back. You can skip the ad or watch the ad. I'll be back in 1 minute from now. Okay, here we go. Okay, you won't miss anything. I'm just going to take a little break for 45 seconds now. There are going to be commercials put in here shortly, but we're still working on them. And right now it's just a 37 seconds of me talking nothing. But anyway, that's all to come. Let's have a look. We've gained another subscriber this morning. Let's take a quick look. We'll just clear the timer for now, and we'll have a quick look. When we get to if we get to 3,000 by Friday, we're giving away 1 million Shiba Inu coins on Friday. If we get to 3,000 subscribers by Friday, so we're 198. So 192. Apologise, 192. Let's see if we can get there. We've moved the goalpost a couple of times, but we're not going to move it again. We can't keep moving it. That would be silly. All right. But anyway, just thought I'd let you know where we are at. Let's go now back to our stocks. Arrival is coming up again. Market down 23. Market profit, you're down 23%. How are you down 23%? You've been shorting the stocks again, haven't you, market? We know what you've been doing. I'm sorry to hear that, mate. We're all up. I'm having a great day. Moose has just made $7,000 investing in SPY. And there we go. But Arrival is up nearly 4%. Good. JNJ just peaked off as expected. Shorter than this overvalued steaming pile. Oh, I'd never short. See, he's down 23%. So for all the gains he's made by shorting the stock, he's now lost it all. That's the point. That's why I never short the stock. Don't short the stock. You've got people working every day to improve the world and make the companies better, innovate, research, building, developing, experts. And you've got people at home behind their computers banking on it all going south. That doesn't, to me, make any sense. You're fighting the tide. You're going against what everyone else in the world is trying to achieve. Nobody at the company is trying to make the company fail, except the people behind the scenes, like Market Profit, who's trying to make money out of everybody failing. I think shorting stocks is the most ridiculous thing in the world. I know a lot of people do it. I know Market does it. I know a lot of people make a lot of money from it. But you're always gambling on everybody failing. When everybody's working to go forward and be better and grow, you're betting on them failing. That to me makes no sense whatsoever. It's never made sense to me. If you live your life negative, hoping the world will come to an end, what is the point of living, quite honestly? I don't know how I'd get through a day. How do you get out of bed in the morning when you're just betting the world comes to an end? I choose to be optimistic. I mean, rightly or wrongly, being optimistic is just positive. I mean, I can't see any sense of being negative, but there you go. It makes money sometimes, you lose money sometimes. I guess I'm at 53% this week. Congratulations, Matthew. You've done very, very well. Very, very well indeed. Nvidia is having a good return. Meta is up 1%. This is great. Over the past 7 days. Very, very nice indeed. Lucid is now up 1%. I just got back from Barbados 2 weeks ago. Not living in fear. No, I can see that. Robin Hood is up today 1%. Everything's returning today. Very nice. Very, 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 very good indeed. All right. PayPal is up today as well. Very good. 35. This is one I need to trim off at some point. All right. I need to trim off some point. I've got too many. I've got 4% here. I'd rather have 4% of JNJ than PayPal. But at some point this will make money. But this is way too big. Way too big. Way too much money in there. But at some point it'll go up. I just bought it. My order in waiting to get filled. I only buy limit orders. I just bought. What have you just bought, Moose? Moose, what have you just bought? You don't say. You just say, I just bought. I put what in what? Immersion. Which stock? Yes. Which one? Indeed, which one? Spy. Oh, spying. Okay. I thought you'd done that already this morning. Okay, beg your pardon. Apple up 0.68. Google is up what? This is great. Great. Got a lot of dividend payments coming out soon as well, so I'm excited about that. I'm up nearly 2% now. Oh, hey, look at Ethereum today. Ethereum is having a bit of a pump. I'm still down 4% on it, but I sold that one from the morning. Are you doing it again? Very nice. The market is actually extremely irrationally right now. Bond yields skyrocketing, financial conditions tightening, liquidity being sucked out, and yet the market's ploughing higher makes no sense. It's called positivity, right? You're never investing in stocks. You're investing in people's sentiment. Huge bull flag on Lucid. Needs this to go. Lucid. Let's have a look. Ethereum. Bitcoin up 2%. Oh, wow. Look at this. Interesting stuff. Let's go back to Lucid. Let's have a little look at our Lucid. Lucid's up 1.8. I'm still down 15%. I didn't buy this dip because I already have too much in it. I'm riding it out for the long. I've already made my money on Lucid. Lucid's made me thousands of dollars. Now I'm just riding it out for the future. Because in the future, this will be a $100 stock in the future. So this will do well in the future. Right, we're up now 1.78. Oh, this is very nice. Very, very nice indeed. Market profit, who cares? I'm in to make money, and I'm up and down is very good for scalping. Yeah. The everything bubble is no joke. The everything bubble is no joke. The everything bubble, what does that mean? 1.73. Very, very nice indeed. Arrival, 6%. Oh, look at that. Arrival, up 6%. This is looking good today. Got a lot of stocks down, though, at the moment. A lot of stocks down. But there's a lot with profit in as well. The S&P, where the biggest part of my money is settled. Oh, I want to do a little test now. Are you ready? I'm going to press a button. And when I press a button, I should be able to sing to you and try something out. Can everybody tell me when I press this button, it turns my effects on, my echo on, if you like, my reverb on, and I can sing a little song. I want to test it. Are you ready? So today everything's going up, so I want to go. Fly me to the moon and let me play among the stars. Let me know what spring is like on Jupiter and Mars. Is that working? How did that sound? Did that work? It's a new little feature on the show. So if anyone says, can you sing a song? I can do the voice of someone and no reverb. There was no reverb on it? Of course. Yeah, there won't be, will there? You're right. You're absolutely right. There won't be. That only comes on TikTok. I get it. Didn't sound like it. No, you're right. It only comes on TikTok. Didn't work. You're right. Hang on then. I've got an idea. Stay right there. Let's try that again. Hang on. Stay right there. 1, 2. Fly me to the moon and let me play among the stars. Let me know what spring is like on Jupiter and Mars. Is that better? Is that better? Did that work? How did that sound? How did that sound? Bought the Tilray on the dip. Let's have a look. Did that work? Market, you're overthinking the market. Sounds great. There we go. Buy what everyone else is buying and sell after it goes up after a few percent. There we go. Buy what everyone else is buying and sell it after it goes up a few percent. That's very sensible. The house is telling you that you're going to lose right now. The Fed is the house, and they're actually telling everyone to get out of the equity markets. No, they're not. The Fed are not telling people not to invest in companies. That wouldn't make any sense. No one invests in companies. There'd be no money. There'd be no companies. That would be pointless. There's no way the Fed are saying to everybody, do not invest in anything. Let everything crash to zero. What sort of negativity is that? That don't make any sense. I'm sorry, market. That don't make any sense. I don't believe in that. If you said that, that don't make any sense. All right. Anyway, we're up 1.76. Tilray's had a good return today. I'm still down 19%, but it's oversold. That will come back in a heartbeat. It's oversold. All right. It's a good company. Oh, look at what sort of day we're having today. This is much better. You probably have reverb setting in your OBS. OBS? I don't use OBS. We got professional studio here. We use Ecamm Live and Restream. We don't use OBS. What are you on about? I've got reverb and special effects. Very reverb. Yeah, I'll tweak that later. Maybe a bit too much. You probably have a reverb setting in your OBS. Bullard just came at us today and said they're actually trying to push down speculation in frothy high valuations. What they say and what they do and what they actually mean are different things, right? Market profit, the liquidity will really dry up around June. Until then, the market can still go up. Anyway. Up 2% today. Very nice indeed. Let's see where the gainers are. Arrival is up 6% today. Still 16% down. Still 16% down. I've got too much in it. But JNJ just dropped off a bit. But I'm not selling that. The dividends are good. I like the dividends. I like the security in the stock. It's up 8.5%. If it pulls back a bit today, that's okay. Market profit, liquidity will really dry up around June. Don't fight the Fed on the way up and the way down. You can't have it both ways. Of course you can have it both ways. Of course you can have it both ways. IPOF. Just dropping back again now. Just up. I'm up 4%. I could sell that and take that out, but I like the idea of owning it. S&P today is up 0.93, up 3% now. I'm okay with that. Tesla over $1,000 again. Good. We got the earnings report tomorrow, of course. Now, if you've just tuned in, subscribe, ring the bell. Some of you haven't liked the video. Why not? Like the video. Help us grow on YouTube. Be positive. Help us grow on YouTube. As we hit 3,000 subscribers, by Friday, we're giving away 1,000 Shiba. 1 million Shiba. And if we hit 10,000 subscribers, when we hit 10,000 subscribers, we're giving away $1,000. So there you go. Share the video. Help us grow. Why wouldn't you? We've got free money here. That's what the market is all about, both ways. Indeed it is. Yeah, you can't have it both ways. Of course you can. That's what it is. That's how I make my money, by going on it both ways. Anyway, you can decide. up 3.5%. Virgin Galactic up 3.5% now. Today, 888 again, good. Doesn't want to go below 9, likes it round there. Amazon, great day. I'm up 9% with Amazon now. Very, very nice. 9%. I've made $256 on Amazon. Very, very happy. Plenty of profits in there. I could clear my Amazon away. PLT only need it to go another $8. Fear is our greatest divider. Yes, it is. Totally agree. Nvidia is very strong today. You can have your cake. You can have your cake and eat it too. Yes, you can. Of course you can. That's how you trade. Any thoughts on Netflix earnings today after close? Okay. Jonathan Lack. Let's do a poll. I've been told about this now. Thank you very much. Shall we do Netflix earnings? Shall we do Netflix earnings today? Let's have a vote. It's after hours today. I'm happy to do it. Set up an event, and we could do it. That's when we listen in. I set up an event. We listen into the earnings call. We can discuss it. Who would like that? Jonathan Lack has just come in. Jonathan Lack, I'm hoping, will say yes, and I will set up the earnings for you, and we can all listen in. And then have a conversation afterwards. Be very interesting. Who's interested in the Netflix earnings report this afternoon after hours? If we get a good response from that, I will do that. No, following Fed monetary policy is only one direction. The Fed has been supporting equity markets since 2008. This is the first time they have been adversaries. Great time to sell on strength. The Netflix earnings call will be very interesting. Okay. So who fancies it then? Netflix scares me on earning days. Not sure why. I don't have any shares. I like that. Fusion 301. You can always rely on a great comment. He turns around and he says, it scares me. I don't know why. I haven't got any shares in it. Well, it shouldn't scare you if you haven't got any shares. I mean, seriously. Anyway, whatever. That is quite funny, though. I'll give you that. So let's get a response. How many people are voting? We've got 5 votes now. 80% votes yes, Netflix. So let me know if you want a Netflix. We're up nearly 2% now. Nearly 47 grand. I'm up $1,000 today. Much better. Much better. Very, very nice. Very, very happy today. So many variables affect that market. They do indeed. Netflix lost 1 million subscribers for Russia alone, and the UK has been losing subscribers in droves. Yeah, do you know why I don't invest in stuff like that? It's not proprietary. It doesn't do anything anyone else can't do. That's the problem. Netflix might be great, but anyone can be a Netflix. I could be a Netflix if I had the money. Anyone can set up Anyone can set up a competition and offer a better deal, and people unsubscribe. It's such a dangerous market. When we only had 4 channels, the BBC One, BBC Two, ITV, Channel 4, everybody watched everything, right? Now we have millions and millions of options. Hey, you can even watch Martyn Lucas, the day trader. You know what I mean? Everyone's got options. And to be quite honest, I offer better value than Netflix. I should be selling shares. People watch me more than they watch Netflix. Yep. There are so many. Exactly, Martin. Netflix is an entertainment company, not a high-growth technology company. I don't like it. I don't invest in it because anyone could beat it, knock it off its top spot at any moment. That's the trouble. I mean, literally, Netflix, everyone tomorrow, if there was some tweet that went out that Elon Musk has got a better version of Netflix, it's coming out tomorrow, and all the channels are on his channel and on his service, and it's cheaper, and it's cool, and Elon Musk says it, everybody would unsubscribe to Netflix in 5 seconds. Netflix can't make you stay. I love Netflix. I've got Netflix. I subscribe to it. But the moment I decide it's too expensive, the moment there's something better and cheaper, I'll sell it. I'll sell it. I'll cancel it. I'm not a shareholder to Netflix. I'm not just going to hold it forever. If I want to cancel the service, I will. They keep putting the price up, I'll cancel it. I'll watch something else. I'm always trying to get rid of my bills. It's not what you earn that makes you rich. It's what you don't spend that makes you rich. Simple as that. People keep getting more and more services. Subscribe to this, subscribe to that. I mean, you turn on your smart TV, every program is on a different network now. Like, subscribe to this one, subscribe to that one. It's an absolute joke. There are so many different services to subscribe to. It's an absolute joke. I hate it. It's absolutely ridiculous. So anyway, I think it's pointless. Anyway, you can decide what you think is right there. Right. It's time to end the show. I've got to get off, make some videos. We'll be back. We're going to do Netflix. How many votes did I get for Netflix? 8 votes. Is that all? 8 votes. There's 21 people watching. Right, listen up here, people. There are 21 of you watching the show right now, and only 8 of you have voted. Everybody vote, please. Do you want to see the Netflix earnings report after hours today? Right? There should be 21 votes. There are only 8. So come on, everybody. Vote. It's free to vote. Don't cost you anything. I like it also, and subscribe, but it's a coin flip on earnings. What's your stock of the day? Stock of the day, Johnson & Johnson. And I'll tell you why, because normally you get sell the rumor, buy the news, market, the shares often dip after the earnings. It was a good report. The earnings report was good, and it popped. And there we go, 8 votes. Bill says, I voted. CLSK for me, up 4.51. Very nice indeed. Yeah, to me, it's Johnson & Johnson today. Remember, this isn't a stock that'll do 30% in one day. This isn't a meme stock. As you all pointed out, it's boring. But it shouldn't be. It's a staple. It's a solid stock. It's why it's 3 1/3% of my portfolio. It's a stock you can rely on. It pays a dividend. It's good. Campbell Soup and Raytheon, nuclear bombs and canned goods looking good. That's funny. Campbell Soup, Raytheon, nuclear bombs and canned goods looking good. Yeah. No joke there, actually. He's not far wrong. All right, 9 votes. There's 20 people watching right now. There's a vote in the live chat, and only less than half of you have voted. Why is that? Damn, spot on. Yes, indeed. Right, up 3.5% today. So we're going to close the show right now. I've got videos to make, cash giveaway videos to make for you. We have obviously got a overwhelming majority saying that we are doing the Netflix after hours, so I will prepare that now. The S&P, great, up 3%. It's looking very, very nice indeed. I've never sold it. I've only invested continually into it. I'm up 3% on it now. Johnson & Johnson baby powder. It was used on me 66 years ago. Still working. Oh, Market Profit has given me a super chat. And you know what happens when I get a super chat in the show? You know what happens now? We go over to the piano for a minute. Here we go. Super chat time. There we go. If we get a super chat into the show, that's what we do. It's a new feature. This show is all about trading and relaxing and staying calm with the piano. So when I get a super chat like that, I go to the piano and I play some soft music for a moment, calms everybody down, chills everybody out, and a huge thank you to Market Profit for the support to the channel. Appreciate it very much indeed. Fusion 301 says, nice. There we go. Thank you very much indeed. And the support I get for the live shows. Remember, just so you know, I don't make any money from the live shows. Hardly anything. A few cents, maybe. Because the live shows are not optimized by YouTube, and the ads are 0.0001 cent. It's very different than when you make an actual video, and very few people will watch these videos afterwards. They don't gain numbers like a specific video for a specific subject. The live videos are all supported. My time is supported by you guys with the memberships and the tips and everything else. So I really do appreciate it, and that's my little way of thanking you when I get a super chat to play a little song there. All right, we've got 14 votes now. 71% said yes. I think perhaps people are behind. That's why our votes are behind. I think it may be that. All right, we're going to end the show. I've got some videos coming out. I've got the competition videos coming out. I've got the... happy with my NFT purchase. As my way, Rob McLean, you've not bought one of my NFTs. Mike has just done a super chat. Rob McLean, happy with my NFT purchase as a way of supporting. Rob McLean, you said yesterday you've bought one of my NFTs. What do you mean? I've not seen it. I've not seen. Don't have to sing, Martin. Any word on the spices and sauce? No word at all, Bill. I think I'd write it off, to be honest with you. I don't know what's happened there. We've mentioned it so many times. Let it go, Bill. It's not why we're members for a tin of spice, but we've been let down by that, I'm afraid. A great day to sell all those booming stocks. I don't think so. I'm going to hold them. But for me anyway, personally. So Rob, I'm glad you mentioned the NFT. When you go onto my NFT collection, you make an offer or buy one. I've not had any come through. I've had no offers come through or no sales come through. I don't think you've bought one. In fact, I know you haven't bought one unless you bought one off. Ali yesterday, who bought them, but I don't see. Oh, hang on a minute. I do see 3 owners. Let's have a look. Which one of you? Let's have a look. Hang on, I am seeing something here. Just bear with me a second. I am actually seeing something here for a moment. Where can I send you for a minute? Just bear with me a second. Maybe you have. I've got 3 owners. So I want to see what's going on. Just bear with me a second. I'm just trying to get up the window over here, and having difficulty opening up this window over here for some bizarre reason. Oh, right, here we go. Okay, just bear with me a second. I'm going to send you over to this screen, and let me have a look. This is very exciting, by the way, if you've done that. You said yesterday in the chat, you said, I got one, and I thought, I don't see it anywhere, but maybe you did. Maybe you did. Just bear with me a second. I've got a couple of things I have to do here to open it up, because you have to sign on with your wallet, your crypto wallet. Okay, so just bear with me. I have to go into my MetaMask wallet. I have to log in to the wallet, which is what's linked to the OpenSea collection. Once I've done that, I should be able to see the collection. All right, so now we'll put that back into there. Now, hopefully, let's have a look. All right, okay, let's have a look. So, let me refresh that screen. I did yesterday, bear with. I will hold on the reviews for the 14 bottles I got. All right, okay, so let's have a look. 3 owners. Let me have a look at this. We've never seen this before. Right, 3 owners. Yes, what is that one there? Okay. From... Yeah, Celtic, yes, it looks like you did. So it looks like you. I must have accepted an offer from you, and I thought it was Ali. How weird is that? Look at it. Looks like it. Hang on then. Okay. This one here. It looks like you own... Yes, you own this one. Owned by Celtic. Yes, you do. I never even realised. List. You... Yep. Yes, you certainly do. Yep, that's it. Yes, you do. You own that one. You're absolutely right. We've now sold 3 of the Day Trader NFTs. Congratulations. Thank you ever so much, Rob. Can you tell me what was the experience like? I'd like to know. I'd like to know what the experience was like. It cost you $5. What was the gas fees? How did it all work out? I would like your experience on it. I'd love to know from you, because you can now trade these now and start to advertise them. And as the channel grows, so will the value of your NFT. There are 18 in the collection. There are 15 left now. It wasn't easy, I know. But now you've done it once, right? It should be easy, right? Now you've done it once. There we go. I want to say a big shout out to Mike for giving me a super chat, by the way. And you know what that means? Got a super chat from Mike. All right. So here we go. There we go. A little bit more piano music. And every time we get a super chat, that's what happens. Thank you very much indeed. Thanks, Martyn. Always nice to hear you play. Very welcome. Very welcome. Right, that's more like it. We now got 17 votes. That's much better. 17 votes. We are going to do then the Netflix. I will go and set up that show. I'm going to end the poll. Thank you, Mike. Thanks for all the support today to the channel. Ali described the process, but was still a nightmare. Well, I guess now you've done it, it's much, much easier. There was no gas fees, right? So this is not financial advice at all, and I'm not telling you so you buy a $5 NFT from me. But honestly, with the rate that we are growing, with the rate of NFTs and crypto, if you buy my NFTs and you get them as cheap as they are right now, just a few bucks, get yourself some, get the whole collection sold. The value will go up. That collection, the original collection, will go up, and you can trade them. And I'm sure, very confident, as the channel grows, people want to buy those original NFTs. They're all one of one, and you'll make money from them. And you can trade them as a member, Rob. You can trade them in the live chat. You can trade them on Discord. And they themselves will promote the channel, which will then promote the prices. I think it's a win-win for everyone. I strongly think it's a great opportunity. I do, honestly. Anyway, Mike's got to go, have to go. See you later. I didn't find an option to bypass gas fees, but picked lowest option, which I think was $7. Okay. Because Ali bought it with no gas fees at all. Was it $7 in total or $7 on top of the $5? Because as I understand it, and you can tell me differently, once you've bought your first one, you are now on the blockchain. Your account is now on the blockchain. You can buy more of them for no extra cost. On top, $7 on top. Okay. Because I know that Ali didn't spend any money. Do you know what it might be? It's the first time. Just go and see. You don't have to go through and buy one, but go through and click on one and see if the next one is free. I think it will be free. I think once you've got yourself on the market, on the blockchain, it's free. I might be wrong, but I'm pretty sure. Well, I know for a fact Ali didn't spend any money because he'd already bought some. His account was on the blockchain. So I think if you go back now and look at another one, and it's $5 or whatever, that should be all it is. It may well be on the blockchain. Geez, it is, mate. Let me tell you, it is a minefield, right? It is really hard to understand, because I will tell you that I've used the Ethereum blockchain. I've used the the MetaMask wallet, and the money I've got, and I can show you it, right, is here on my account, right? Look, see this bit? Oh, you can't quite see it, right? Yeah, see it? $15.10. See it at the top there? Look, I can't even access that money at the moment. I don't even know how to get to it. It's not in my my regular MetaMask account. Even though it's Ethereum, Polygon, I'm doing all that stuff. I can't even find it. So trust me, I know how difficult it is. I'm 55, 2 years less brain cells than you. Yeah, listen, mate, I ain't got a clue how it works either. This is why we're all learning. We're all learning. That's why I've made them like $5, so they're cheap as chips to buy. You're not going to lose any money, right? That's the point of it. And the idea is we learn from each other, right? We're learning from each other. All right. Okay. Arrival. Look at this. Fantastic. We're doing really great guns today. Johnson & Johnson is holding up now where we want it to be. Awesome. IPOF. Every day to school. Absolutely. Keep learning, innit? Vanguard S&P at 1.3. Oh, look at this go today. Tesla, Going up now into the earnings tomorrow. Right, I've got to get off. I've got to prepare the Netflix order after hours today. We've got Tesla tomorrow. There are competition videos coming out. Lots of stuff to look forward to. Rivian is about to make money. This is great. Virgin Galactic is now up to $8.92. This is great. Amazon is up 2%. Oh, man. This is great. I'm up nearly 10% on Amazon now. Nvidia. Oh, what a day. What a day. What an absolute brilliant day. This is absolutely great. I'm loving it. I didn't trade. I didn't sell anything out. I just held. Lucid's up 4%. This is looking very nice. People are buying back in. The confidence is coming back in. If we get the slightest rumor that the war is coming to an end, if we get that at any point, get ready for stocks to go up 30%. STSS, let me do that for Queen. STSS, Sharp Technology, up 63%. Yeah, look at that. Are you in that one today? Oosh, April 18th. Wow, look at that. There you go. Are you in that one, Queen? Did you make the money today? There you go. That's a great one, isn't it? Did you get into that? Up nearly 3% now. $1,200. Lovely. Absolutely great. 47,000. We'll have a final look at our Bitcoin. That's held up today. 179 as well. Ethereum. That's great. Very, very nice. Okay. I want to thank everyone today for tuning in. I want to thank everyone today for the super chats, for the piano music. Thank you for that. Just calm everybody down. It is nice. If you want to calm down and you want a bit of relaxing music in the show, just offer a small super chat and I'll play you some on the piano. Great. Lovely. Thank you ever so much, guys. I've got some videos to make. I'll see you back later for the closing bell. Plus, we've got Netflix. Tomorrow night, of course, we've also got... SoFi. Just got a breaking news on SoFi. I need to go and check it very quickly. We've also got Netflix coming out. Sorry, Tesla tomorrow night as well. SoFi up 5%. I'm still down 20% on it. It's one of my bigger ones. I'm down $385 though, but 20% down today. That's overall, but looking much better. Very nice. Up 5%. It just seems everything is going that way today. Very nice day. I will say it was predicted today. Musanella predicted a green day. I will tell you that right now off the bat. Before we open today, he did predict a green day, and it is a very green day today. Very green day today. All right. Okay. That's great. Very, very happy today. Thank you very much for all being here, and I look forward to seeing you all back later. Congratulations to Ali and Celtic. That's Rob McLean, who've got my first NFTs. 3 of them are sold. The values are going up. I'm applying to get verified on OpenSea. That helps the account. That helps the NFTs and everything else. So thank you very much indeed for that. And I look forward to seeing you all back later on for the closing bell and, of course, the after hours with Netflix. Take care of yourselves and each other.